Okay, and the last one on my list here, which wasn't on the opening part, which is something I'm working on personally, is a very different structure. It's called permanent capital. And this is really what the picture is. So you as an investor put money in and nothing happens. And that sounds stupid, but it's not. And it's not for some really subtle reasons. So the way this works in terms of terms, you buy some equity maybe. Typically that's the underlying piece here. You're buying something that has a value. It's typically equity. But you're not expecting to ever, it's not equity in that same form we looked at before, because you're not expecting to have an acquisition happen or an IPO of that investment. Instead, there's liquidity that comes in the capital structure. And it comes in one of three forms. Either you're going to get paid a dividend stream forever. It's permanent capital. So you're just going to get dividends back from this. We've seen that in the US and elsewhere in the form of like Reits. So a REIT is a real estate trust. You buy shares in the trust, they invest in real estate, and they share back with the owners 90% of their cash flow, 90% of their profits. So that'd be like dividend stream. Another one would be buybacks. I'm in a deal where I bought some organic farmland, and the value goes up most years because the value of organic farmland goes up. And my way to make money on this, I get a small dividend check, tiny, insignificant dividend check. But really what it is after I've owned this for a few years, I can ask them to buy it back, and they'll buy it back for whatever it's worth then. So I have some liquidity. And the last one is that maybe the permanent capital vehicle itself goes public. And that's the one that excites me, because then we've split the needs of the investors from the needs of the entrepreneurs. So now the investors get out because the company is public. IPO is the initial public offering. The capital vehicle is a public entity that buys and sells shares on a stock exchange. And so investors can leave whenever they feel like, but the capital that's been invested in the fund then gets invested in companies forever. And just the value goes up because the value of those investments go up. And so a great example of this is a company that I just started last year. It's called Africa Eats. And so we're a permanent holding company. We own pieces of 27 food and ag companies in Africa. So minority stake ownership in all these companies. They're growing. You saw some of the logos because we owned them before. They're all fledglings. And the idea is that we're taking Africa Eats public as soon as we can, and investors can then have their money back whenever they want. But these companies, we expect these to grow to be 100 million in sales by end of the decade, billion in sales by the end of the 2030s. And we'll add in hundreds more into this after that.